Are you doing cash or card?
Card, please.
The past couple of years have been tough for retailers. Some have struggled to grow their profits, and others have shuttered their doors entirely. But one has managed to defy the odds. Discount retailer Five Below.
I remember when I was a kid, get like an allowance, I could come here and buy anything in the store because I could afford it.
It's been one of the success stories of US retail over the past 5 or so years. I think one of the reasons for that is because they offer great value for money, which the consumer is very attuned to at the moment, but they also have a very fun shopping experience.
Aside from fun, Five Below is well on its way to achieving its ambitious plan to triple its store count and double its sales and earnings per share by 2025. Despite this goal, Five Below's share price has tumbled in the first half of 2024, as the company has missed Wall Street's expectations on revenue and same-store sales in Q4 2023 and Q1 2024.
What the heck just happened to the stock of Five Below today?
Mounting retail theft has exposed the volatility of the retailer's stock price. Plus, the company will have to face growing pressures from Chinese value retailers. So is fun a long-term bet worth going for? Since going public in 2012, Five Below has grown its net sales from less than $500 million to over $3.5 billion in 2023.
In the aftermath of the pandemic, a lot of consumers were flush with cash. People were not traveling. They'd saved some money from the stimulus that was paid out. Now, they're not really going to buy a lot more consumable products because at the end of the day, we can only eat so much food.
Five Below falls into the discounter space, which means it's a retailer whose focus is on value. Most of its items are $5 or less. But unlike dollar stores, which are typically very focused on consumables, think things like food and household items that most people need, its mainstay is discretionary products. That means things that are non-essential. The company focuses on 8 consumer categories. This line measures growth in the S&P 500 discretionary sector. Now this line shows the growth of the retailer's stock in comparison, since the company began trading on the stock market over a decade ago.
What they do very well is they're on trend with product, and they hit those trends early because of the way they track the market, and they have people that are just tracking social media, tracking, kids and how they're spending and what they're doing.
Kids are really into slime right now, and they have a lot of it. Stanley Cups, they have their own version of them right here. Taylor Swift fans have made these very popular right now by trading them at her concerts.
Five Below sells a lot of fun products. There's a bit of a treasure hunt mentality because there's lots of different things in there for all types of consumers. Most of them are centered around fun.
Just found some foreign candy, which is pretty cool. Gonna throw that in the cart.
Where else can you find a Skittles scented body scrub than Five Below? So that's the fun of our store. It's a treasure hunt. You always find something new in it.
Five Below apparently duped the most popular Sol de Janeiro scents.
Y'all, look what I found. It looks like this Five Below just got in the black colored version of the TikTok famous Sound Top wireless table speaker.
I actually got this edible slime at Five Below.
Five Below opened 204 new stores in 2023. That's almost double the 103 stores in 2017.
From a retail perspective, Five Below's targets are ambitious and much more growthy than the traditional retailer. To get that kind of growth, Home Depot had that 20 years ago. Lowe's had it 20 years ago. Walmart was 20, 30 years ago. That type of growth is really for retailers that are still young enough that they're opening stores at a pretty rapid pace.
And although new stores are opening at a rapid pace, its existing store sales is boasting mixed results. In fiscal year 2023, its same-store sales were up nearly 3%. That's significant given that the Dollar General sales from existing stores grew just 0.2%, and Target decreased by 3.7%. But in Q1 2024, same-store sales were down 2.3% compared to the same quarter the year prior.
They're able to fuel trends when they do happen, and they can put out pretty consistent same-store sales, which is organic sales, and we like it for that reason.
But while the years following the pandemic have been overwhelmingly successful for the company, 2024 is off to a rocky start. The company's share price took a nosedive in the first half of the year. Analysts say Five Below trades at a premium. That means investors pay a higher price for the stock relative to the company's earnings. The trade-off? Investors can typically expect more robust growth, but also more volatility.
When you're a high-growth retailer and you trade at a premium valuation, when there are hiccups in execution or sales might slow a little bit, you'll often see the valuation compress, meaning people sell the stock.
Five Below is what you want to talk about.
Yeah, I mean, they had a good quarter, but David, the shrink was incredibly bad. They just had so much theft that it really crushed their quarter. And by the way, on the conference call, the analysts just were after these guys saying how this happened. And one of the reasons why it happened, David, is something that you and we've talked about before that I think is a big mistake for all retailers, including CVS, self-checkout.
Self-checkout has been a bigger problem than I think most retailers ever wanted to admit, and it really blew up in the past, year and a half, 2 years, where it is now proven that yes, people don't always put every item through the scanner, sometimes intentionally, sometimes unintentionally.
Self-checkout really took off, not only for us, but most retailers surged during the pandemic because, as you recall, people didn't want to interact with other people, and the customer really embraced self-checkout. So it was really done. The explosion was done out of customer experience, but, we've got to dial that back now.
Shrink, or loss of inventory, has hit the retail space especially hard over the past few years.
Five Below is not seeing shrink worse. They're seeing it more recently than others.
About the checkout, and interestingly, there is no self-checkout. It's all employee assisted. Not sure if it was always like that or if that's a new thing, but it's certainly the company's intention going forward.
But even if Five Below gets their shrink issue under control, an even bigger threat may come from overseas. Chinese retailers like Temu and Miniso present similar discretionary offerings.
I think the biggest threat really comes from the expansion into value from other retailers. All the retailers look at the value segment and say, wow, this is a great growth area. It's a great growth opportunity, and they want a slice of it themselves. And so even domestic retailers like Dollar General are looking at how they can move more squarely into some of these discretionary categories.
About to walk out of the store and we see that there are self-checkouts that are closed over here. So at some point that must have been in place, but not anymore.
The company once boasted,
Five Below, limitless gifts, Monopoly, Hershey, Bluetooth, all $5 and below. Just go!
But in 2020, Five Below rolled out a new concept in 140 stores nationwide, Five Beyond. Essentially, it's items priced above that $5 threshold.
Well, you have two elements going on. One is they're remodeling stores, which generally when you remodel a store, it helps to drive sales. People get interested again. It looks new and different. And they have higher priced product in this Five Beyond section. And that allows them to bring in some really differentiated goods at really sharp prices.
About 700 stores, or 50% of the company's existing locations, have been converted to the Five Beyond format, which the company said has outperformed its non-Five Beyond stores.
Five Beyond will continue to be a big part of the business going forward. Five Beyond doesn't have to be $20. It could be $6. When there's inflation, it gives you more flexibility to buy a product that maybe you couldn't get for the profit profile that you wanted. And so I think that this will continue to be a win for them.
But Saunders warns that it's important for the company not to put too many high price points in its stores, as it could damage consumer perceptions of the brand.
Five Beyond is the icing on the cake. I don't think it's the cake itself. It is a very nice additional stream of revenue. There's a lot more opportunity there. But I'd say the biggest opportunity still for Five Below as a company is physical expansion and adding more stores.
And the company is planning to do just that. Remember that triple-double plan? The triple is store count. When that plan was announced, Five Below's store count was about 1,200, with a goal of at least 3,500.
As of May 2024, the company had 1,605 stores. It opened 61 stores in the first quarter of the year.
Some retailers will come out with statements to say, look, we're going to add X number of new stores, it's going to propel sales. You look at the map of the US and locations and you just think, no, there isn't really enough headroom for you to do that without cannibalizing sales from existing stores. Five Below is not in that category. There are a lot of retail locations where it doesn't have a presence. There are a lot of catchments and trade areas where it doesn't have a presence. So it definitely has the headroom for growth.
But to sustain this momentum, the company is going to have to show it can overcome its rough start to 2024.
We obviously disappoint investors, and they let us know that today. What shouldn't be lost in everyone, though, is we didn't disappoint our customers.
Two things matter for the company right now. One is product selection. It's the backbone of their company. And two is theft. It's an issue that they need to solve. As I was checking out on the keypad, they asked me, how was the product selection in the store? And two, did an associate help me check out? So clearly they're tracking both of those things.
In Wall Street finance, there's the cockroach theory. There's never just one quarter that's bad, it's two or three. And so I think people start to get nervous and they will sell off a stock sometimes. And then it's a show me story where you have to prove that you can execute on the targets that you told Wall Street you would hit.
It seems like that's where we're at now, is they have to prove to investors that they can fix this shrink problem.
That's right. I think you're absolutely right. Five Below has to prove that they can get through the shrink problem, that sales will remain healthy and stable, that they can continue to grow the store base. All of that has to come through.